Welcome traders to another trading psychology series with funding pips. My name is Paulina and I am your trading psychology coach. And today you'll get a chance to win 100k two-step pro challenge account. So stick around to find out how to enter. I'll tell you later in the video. And in this session today, we're diving into the one thing that destroys more accounts than bad strategies, bad risk management, or bad luck combined, and that is ego. If you can't admit when you're wrong, you're not really trading, you are gambling. And the market always humbles gamblers. Stay with me because in this session, I'm going to show you how your ego shows up in your trading and why it's so dangerous, and how you can replace it with a growth mindset that will save your challenges and your master accounts and your confidence, and maybe even your career as a trader. Now, let's dive in deeper. Every trader has lived these moments, right? Where the chart starts moving against you. Your stop loss is right there, but instead of respecting it, you think, it'll come back. You move the stop. You double down on your position. You start fighting the market, telling yourself, I'm not wrong. The market is wrong. And you know what? The market will turn around. So let's keep on adding those positions. Sounds familiar, right? That's not trading though. That's your ego refusing to accept reality of trading. And here's the brutal truth. The market does not care about your ego, about what you think. It doesn't care if you need to be right. It doesn't care if you've got 3 wins in a row and you feel unstoppable. The market only rewards one thing only: discipline, period. Now, let me show you how this plays in real life on the charts with 2 traders that you've met before, Trader A and Trader B. Trader A is in a losing position, long on Euro USD, convinced it's going up, but the market breaks support and keeps falling down. Instead of cutting the loss, Trader A thinks, no, I can't be wrong. I'll add more to my position and I'll wait till the price turns around. Hours later, the account is suffering and Trader A still doesn't close because now closing means admitting to the defeat. Trader A's identity is tied to being right, not being disciplined. And what's the end result? Account is breached. Now Trader B, same trade, same setup. It doesn't work. Price breaks support. Trader B takes the loss exactly at the stop loss was planned. They journal it. Setup invalidated. What's the lesson? Wait for the confirmation next time. Then Trader B walks away, calm and ready for the next trade. Trader B didn't just save money here, they saved their confidence, because when you cut a loss, you prove to yourself you can follow the rules. And that's where consistency is born. Now, why does Trader A spiral while Trader B stays professional? Psychology explains it. 2 forces at one play: ego and loss aversion. First, ego. The human brain hates being wrong. We link mistakes to identity. So if the market proves us wrong, we feel attacked. It's not just a trade, it's our self-image on the line. That's the recognition trap. You'd rather fight the market than admit you made a mistake. Second is the loss aversion. Studies in behavioral finance show that losses feel twice as painful as equivalent gains feel good. Twice. That's why closing a trade in red hurts so much. It feels like failure, even though it's just part of probability. Now, combine ego and loss aversion. You get the most dangerous trader in the world, the one who refuses to lose. And paradoxically, those traders lose the most. Why? Because the market is bigger than your ego, always. Think about boxing. A fighter who refuses to admit he's hurt keeps charging forward, throwing wild punches, hoping to land the knockout. But the crowd can see it. The coaches can see it. Even his opponent can see it. He's gassed out, sloppy, desperate. And that's when he gets dropped. not because he didn't have the talent or he didn't prepare enough, but because he didn't have the humility to defend, to adjust, and to survive the round. Now look at the disciplined fighter. He takes a hit, he feels the sting, and he knows, I'm hurt, I need to adapt. He covers it up, he steps back, he lets the round breathe, he trusts his conditioning, his training, his game plan. He survives the storm. And when the next round begins, he's back sharper, calmer, ready to execute. Trading is no different. Ego-driven traders swing until unconscious. They can't admit the market tagged they stop. They can't admit they misread the setup. They keep pressing, adding the position size, chasing the knockout punch that never comes. And eventually, the market floors them. Account gone. But the growth-driven trader, they take the hit. They admit it. They say, the setup failed. That's okay. They defend their capital. They protect it. And they protect their mental state. They live to fight another round. Because in both boxing and trading, victory doesn't belong to the one who never gets hit. It belongs to the one who absorbs the punch, adjusts, and keeps showing up in a measured manner. That's what it means to trust the process. You're not going to make every move and make it perfect. You're pacing yourself round by round, trade by trade. And over time, the process, not the ego, wins the fight. All right, let's turn this into solutions. How do you defeat ego and reframe losses so they work for you rather than against you? Trader A clings to ego like it's oxygen. When he loses, the dialogue in his head sounds like this: I suck. I'll never get this. I'm not cut out for trading. His self-talk spirals downwards. And the more he beats himself up, the more he tries to escape the pain. He looks for revenge trades. He doubles down with the lot sizes. He throws logic out of the window. Ego convinces him he can trade his way out of the drawdown, but what he's really doing is digging the hole deeper. Trader B, on the other hand, is a different story. As a growth mindset, when he loses, his self-talk is completely different. I followed my rules. I did my job. The market didn't agree this time, and that's fine. He treats the losses as a feedback, not failure. He writes it down, extracts one lesson, and moves forward. Here's the key difference. Same situation, same red trade on the charts, but two very different responses. Trader A takes it personally, and frustration eats him alive until he quits in despair. Trader B treats it professionally, and consistency builds over time until his edge compounds. And the truth is, every single one of you listening has both those voices inside, the ego-driven voice and the growth-driven voice. The question is, which one are you feeding? Which trader are you becoming? This isn't just motivational talk. It's neuroscience. Your brain literally rewires itself based on repetition, and that's neuroplasticity. When you repeatedly frame losses as lessons instead of failures, your brain builds new pathways. Over time, you stop fearing losses in the markets. You stop attaching ego to trading outcomes, and you start associating losses with growth. Dweck's research on growth mindset shows that people who see challenges as learning opportunities adapt faster, bounce back stronger, and succeed more often than those who fixate on being right. In trading, that's the ultimate edge in the market, because markets will humble you. The only question is whether you collapse with ego or adapt with growth. Now, I want you to join the conversation and comment below and tell me, what's the hardest lesson the market ever taught you? And also, how did you reframe it? Or how will you reframe it after watching this session today? Your answer isn't just for you. It will help another struggling trader reading the comments. And yes, every comment counts as an entry for our 100K account giveaway. We'll be choosing a winner and announcing the winner in the next Trading Psychology blog on Thursday next week. So drop your story below and let's learn together. Because listen, ego is heavy. It weighs you down. It blinds you. It keeps you stuck in the same cycle of denial and disaster. Growth is light. It frees you. It turns every losing trade into fuel for progress. The market doesn't care about your product. It doesn't care about if you want to be right, but it will reward your humility, your discipline, and your ability to grow as a trader. So next time you're in a losing trade, ask yourself, am I protecting my account or am I protecting my ego? Because only one of those will keep you in the trading game for a long term. Ego destroys. Growth transforms. Choose growth every day. And traders, thank you for being here. If today's session resonated with you, don't forget to subscribe and like. We would love to invite you today as well to our first episode of Beyond the Chart series, which is a fundamental interpretation of the markets with Seth, and attend and learn and see different outlook on the markets. Also subscribe and hit the bell to join every Wednesday for success stories, and of course every Friday for Trading Psychology series here on Funding Pips channel. As always, built by traders for traders, and this is Funding Pips. And remember, one session could change your trading forever. I'll see you in the next one.